I'm Priscilla Barrera with the Investing News Network, and here with me today is Frank Holmes, who is CEO and Chief Investment Officer at the U.S. Global Investors. Frank, thank you so much for joining us today.
It's great to be here. Buenas tardes.
Yes. So we are here at VRIC 2020. To start, I wanted to ask you, how are you finding investor sentiment towards the junior resource space this year?
Well, it's got to be much, much better because last year the stock market sold off in the last quarter of the year. This year it's up. Gold is up. Emerging markets are up almost the same as the S&P 500. So there's much more interest in capital formation, etc. And I think with the trade war basically resolved now as we go into the year of the rat. This is the year 2020, a leap year, beginning of a new decade. And the year of the rat is supposed to be good for making money in Asia.
All right. So we've seen geopolitical tensions rise. We're still looking at a U.S. China trade deal, but it's also an election year in the U.S. How do you see this factor impacting gold in 2020?
Well, I think President Trump has got to be worried because the Purchasing Manufacturers Index is below 50 for manufacturing, and he's got to get that turned up because 6 months is the leading indicator. So, and I think that the idea of lower interest rates and anything to stimulate economic activity will be on his agenda. And so that means a weaker dollar, which is good for gold. But I also think the resolution of uncertainty between China and America, because they are the largest trading bloc in the world. The largest consumption bloc is China and India, known as Chindia. That's 40% of the world's population, and they have rising GDP per capita, and that's good for gold for love. But what we're seeing is the fear, because there's almost 300, the numbers are mind-boggling of negative real interest rates. We had the peak that took place in August, predominantly out of Europe, to try to stimulate. They call PMI is turned positive, Purchasing Manufacturers Index. So this is good for copper. Copper is that lonely metal that I think is a huge upside opportunity. Gold is in a bull market, and it started 2 years ago. After the blow-off that took place in 2011-12, it fell for almost 5 years, and it's now gone up, and it climbs a wall of not believing. Most people just don't believe. But the smart guys that are here, like Ross Beatty, he's forming a gold mining company. So he's just doing it at the right time. So I'm a big believer. But the juniors are still going to struggle unless they have something new. And that's why I made an investment in GoldSpot, because it's AI. It's artificial intelligence. So I love the stories of GoldSpot. I think that's the junior type of stocks you want to take a look at. And then the emerging market stocks that I love, they call those mid-cap, is like Grand Columbia. They have an 8.25% gold note that trades in Toronto, and this is a stock that Eric Sprott just put money into because it's so undervalued, and they're piling cash in their balance sheet. So I love companies like that.
Right. So we will need to see stocks that are doing something new. But going back to gold prices, how high do you think gold prices can go this year?
You know, it was a great presentation by Pierre Lassonde that said it could be $25,000 in the next 30 years because where it came from and where it's gone. I think it's important to recognize that 30 years ago, China and India were 10% of gold demand globally. Now that they become the largest GDPs of the world, and on a GDP per capita basis, they're 53% of all gold consumption. And it's not done out of monetary fear, it's more about just prudent buying gold for jewelry and love and gift giving. And I don't see anything to stop that or slow that down. So I think that gold prices could be $2,000 in the next 18 months, and I've written about this, that it could be 10,000. But unlike before where there's a crisis, Iranian crisis, no. It's the money printing, the unprecedented money printing, and the collusion between the G20 finance ministers. So before they never had such coordination, like they're the OPEC of money. And so when you recognize that they own, you can turn around and print this money by protecting each other, showing up in real assets. So Swiss are buying stocks. They're one of the biggest buyers of Apple. The Japanese print this incredible. They go raise money, no one buys it. They create it and they buy their ETF for the Japanese market. So we have money going into real assets, real quality stocks. Negative, we could buy Apple and get a higher dividend than buying a Swiss bond. So that's what we're seeing. Gold is very cheap. Gold should be like $10,000. And Apple's market cap is bigger than all the gold stocks combined by a multiple of 4. So gold stocks and gold are cheap, cheap, cheap.
So, and moving away from gold for a second, we also seen other precious metals increase this year, like platinum, palladium. Do you like those metals, and is it still a good time to invest in those?
Absolutely. They're critical for clean air and clean water, and the whole ESG movement about the environment and corporate governance and sustainability. That's becoming a big phenomena, and that will hurt junior mining exploration, because it's not about that they're bad for the environment. It's too much as actually a social welfare program. So you have to worry more about the communities, etc., that the governments have failed. They have failed miserably in Africa. They have failed terribly in Latin America. And so all of a sudden that burden's going to go on mining companies. And what happens is, why would anyone give exploration dollars if 30% of that money has to go for welfare? So that will make money more expensive for exploration. And the only way to get around that is using AI. That your dollar. So what AI does is it de-risks exploration. It basically slows down wasted exploration money. So there's only going to be a handful of juniors that get to participate. So I think copper can explode, gold can explode, and those companies are royalty companies that already have an asset base, or the Grand Colombias of the world. They're in Colombia. I think that currency is going to be under pressure. So that means they pay their costs in Colombian pesos, but they get dollars for their gold. That means profit margin expansion. Those are the stocks you want to be long.
And so those are some of the commodities you like, but which commodities would you avoid in 2020 in this current state of the market?
Coal. I think, and aluminum. Aluminum has a huge CO2 footprint. If you looked at CO2 footprint for mining aluminum, it's up here, and gold is down here. So I think that there's going to be more pressure because of the ESG on anyone that's mining aluminum.
My last question for you today, for investors that are watching us and considering the current state of the market, how should they approach 2020? Is it the time to buy stocks? Is it the physical market?
I think you have to take a Bridgewater. Ray Dalio is bullish on gold. He's also 2,000. He goes between 6 to 15%. So it's just prudent to have exposure to these gold stocks and rebalance at least once a year, sometimes once a quarter, because of the volatility that's inherent. So I just think it's good to have, and if you're in buying government bonds in the U.S., I think it's better to buy tax-free, because states in America, they have to have a balanced budget. The federal government doesn't, but the states do. So when talking to American investors, it's better to be buying tax munis than it is almost now government paper, for many reasons. So I think you should have my age. So I'm 65 this year. I think I should be 65% short-term income, short-term high dividend bonds, like Grand Colombia has gold notes. I have a slug of those. And then speculate to have 10 to 15% in gold, and then dividend-paying stocks, dividend growth-paying stocks. That's what I should be.
All right, Frank, thank you so much for joining us today.
Thank you. Happy investing.
Right. Once again, I'm Priscilla Barrera with the Investing News Network, and here with me today is Frank Holmes of U.S. Global Investors.